It feels good to be back, doesn't it?
Hey everyone, welcome to In FinTech We Build Trust. We are joined by myself, Gretchen Keller, Amanda Swoverland, Chief Compliance Officer at Unit, and Michael Winter of EY.
While people are getting logged in, a big tradition of ours, in case you are new here, is to go around and to share either a fun fact or a recent win that you've had recently. So anyone in the audience, feel free to add in the chat any of your recent wins in the comments, anything large to small. We're here to celebrate you today. For once, I've come prepared with my recent win and fun fact. This is not usually on my bingo card, coming with a fun fact or recent win, but my fun fact recent win is that I went to the ACAMS Hollywood conference in Florida last week and met tons of individuals that I otherwise, would not have the opportunity to meet, and learned a ton about actually BaaS in this one particular, and Bank-Fintech partnerships in this one particular session. So excited to hear some insights today. And I'll pass it off to Mike. What's your fun fact or recent win?
Yeah, I've actually got a couple very recent fun facts. One is we recently had a very significant milestone in our household. Our 16-year-old daughter got her driver's license 3 weeks ago, and it's been a complete game changer. The liberating sense for her in terms of being able to go off and do her own things, and just the liberating part of it for my wife and I in terms of not having to haul her around at all hours of the day and night, every place.
I was going to say, how do you feel about that as a parent? But it sounds like you're like, go for it.
Yeah, well,
go for it.
You've got to kind of counterbalance the nerves of your kid out driving with the benefit of the freedom that it provides on all sides. The other fun fact is partly because of the driver's license, and we didn't have to be here every minute. My wife and I just got back from a trip to Louisville, Kentucky, to the Kentucky Derby last weekend, which
fun.
Fantastic, and I highly recommend everybody try that as an experience at least once.
Did you can you tell us? Oh, go ahead, Gretchen.
No, I was just going to say, I've been to the Belmont Stakes a couple times because it's in New York, but I have always wanted to go down south and do the whole, big hat, floppy hat thing.
It's quite a show.
Did you wear coordinating outfits, and did she have a fabulous hat on?
Yes and yes.
Love it.
It's a lot of fun.
Amanda, would love to hear a fun fact or recent win from your side.
Yeah, thanks, guys. Michael, we can share stories. I have a 17-year-old boy, so there's all kinds of parenting stuff that comes with that. And I also would like to go to Kentucky because I love bourbon. So there's a couple fun facts as well. I'm a big Peloton person. I love my Peloton. I've had it for over 5 years now, and I try to make it a goal that at least once a week I'll do a class of some sort. So I have a 283-week streak.
Wow.
I did not know that about you. That is so cool.
So that's my fun fact.
Impressive.
For Peloton, do they talk to you? Do they motivate you? What is kind of special about it? I mean, I know it's cool to have an amazing bike in your house.
Yeah, I mean, I do it all. So it's just it's just coaches, right? So it's just like the music, it's the vibe of the coach. So, I'll do cycling, I'll do weightlifting, I'll do walking outside now that it's finally nice in Minnesota. So just, they have an app, they have that you can use the equipment. So gives you a well-balanced approach.
Nice. I love that.
That's fantastic.
Cool. Let's see. I think my recent win for this week would be I was able to host the Oregon Technology Awards. It was presented at OMSI, which is our Oregon Museum of Science and Industry. So it's where you take your kids, you take your family, there's, all the cool exhibits. And we had about 400 people, and it represented all the tech companies in Oregon and Southwest Washington who have some sort of footprint here. We gave out a lot of awards. We had a band. The band was really hamming it up. The finalists are, and then it would do a little drum roll. And before we got going, I checked in with the band and they're like, I was like, are you going to do the drum roll for like a couple seconds? He's like, no more than like 1 second. But then when we were actually doing the event, they were really hamming it up, and they would do like walk up music for the award winners. Like, it was so fun. And probably the coolest thing was there were student award winners, students who were in college, and to kind of hear what the students were working on and teaching themselves to code during COVID. And I mean, there were also some high school demonstrations. It was so cool, and they were so enthusiastic. So I feel like we're probably all going to be working for these kids in like 2 years. So it was fun.
Very likely.
When I
Very likely, yes.
Other random fun fact, I used to be a teacher in a past life, and they were beginning to teach the kids how to code in kindergarten. So
Wow.
it's only a matter of time until we're all, reporting into a 19-year-old.
Yeah.
So everyone, welcome again to In FinTech We Build Trust. We are so glad that you're here. Do let us know in the comments where you're joining us from. In FinTech We Build Trust is a monthly dynamic LinkedIn Live series. It is also available on YouTube, Spotify, and brief snippets on TikTok. And we offer thought-provoking discussions for professionals across fintech, crypto, Web3, as well as traditional banking. Our mission is to connect and empower those who are considered the trust builders of the financial world. Our show aims to bring together industry experts to tackle timely topics, analyze emerging trends, and to overall foster a sense of community among those dedicated to building transparency and trust within the financial services ecosystem.
Cool. Yeah, we continue to shine a spotlight on the essential roles of compliance, risk management, legal, audit, financial crime prevention, and corporate governance. And each episode is designed to inform and celebrate the work of these professionals who navigate these complex regulations, innovate responsibly, and lay the groundwork for a trusted financial ecosystem. Did I just repeat what you said? Oh my gosh, I'm so sorry. Anyways, we're so excited you're here. I'm a little rusty and a little tired, and I'm just going to pass it back to Gretchen. Thank you.
No worries. We did take a month off last month. I'm a little rusty as well. Anyone who is supportive of these objectives and ideas is welcome. Please be reminded that we do give away books at the end of the show that are of our speakers' choosings. 2 active participants in the chat at the end of the show. So, any ideas or questions you have for our speakers, feel free to chime in. Going into intros, my name is Gretchen Keller. I lead our executive search team here in the US for Hamlin Williams. We're a global executive search firm. I particularly specialize in compliance, financial crime, and legal recruitment. And I will work with anything from your traditional banks and financial services firms, consultancies, broker-dealers, all the way through to your fintech and crypto firms, anything that's 3-person seed funded, all the way through to your IPO, multinational, publicly traded firms. So that's a bit about me. Passing it over to Dana for an intro on her side.
Hey everyone, my name is Dana Lawrence, and I lead fintech programs at Pacific West Bank. And also I'm a board member for Technology Association of Oregon. So I would love for the both of you to just introduce yourself in a little bit more detail. We're so excited to have you today. Amanda, I'll pass it over to you first.
You'd think that I would have figured out this mute button thing within, over the last 5 years.
You work in a tech company, but yes.
I know. So Amanda Swoverland, I am the Chief Compliance Officer of Unit. Really my passion for this space really started in 2011 when I joined Sunrise Banks. I left Unit from Sunrise as their chief risk officer, but really found my passion there and in community banking and just seeing what the banks can do for underserved and how fintech could really expand that community through fintech and additional technology. One of my favorite parts of being a bank examiner way back in the day was doing CRA exams and really figuring out how banks were helping their communities and helping the underserved. And so I learned a ton when I was at the bank, but I definitely saw a need for better technology in these bank and fintech relationships. And so I had the privilege of joining UNIT in 2020 as the chief compliance officer to help build that better technology that both banks and tech companies can work with to embed financial products.
Awesome. Amanda, we're so excited you're here. And I just want to again, point out that you have regulatory experience, bank experience, and fintech experience, right? So that's a pretty powerful trifecta of experience.
Or you can just call me old.
we pump people up on this show. So Michael Winter, would you please introduce yourself in more detail? We're thrilled to have you as well.
Absolutely. Everyone, I'm Mike Winter. I'm a partner with EY based in San Francisco. I lead our financial services risk management practice in the West, but also our banking as a service offerings nationally. I actually started my career in private law practice before going in-house to an investment bank many years ago, and then held numerous roles across legal, compliance, tech and ops, and front office business management across the banking industry for years before leaving and going into consulting. Flash forward now to banking as a service. That's really where I spend the overwhelming majority of my time working with community banks to help to navigate the regulatory framework, rapid risk transformations, technology and data transformations, and really helping banks to think through alternative operating models to be able to effectively scale their businesses up and down based off needs. So
cool.
Great to be here.
We have some major brain power here today, so it's going to be a great discussion.
So let's jump right into it. For context, Dana and I did an episode on what we referred to as BaaS at the time. Over a year ago, to my understanding, the preferred terminology as of late is Bank-Fintech partnerships. So jumping into our first sort of meaty question here, and this one is super broad, and would love to kick it off to Amanda first. Can you explain, what exactly is a Bank-Fintech partnership model, and how does it work for those who maybe don't know in the audience?
Yeah, I mean, we could probably spend 45 minutes diving into just that question alone. But I always like to say when I get this question that actually bank fintech partnerships have been around for decades. American Express and Delta actually, if ChatGPT and all of the internet didn't go rogue on me, I believe it was 1996 that Delta and American Express first joined partnerships. Right, we all have those loyalty brand cards in our wallets. So this concept has actually been around for decades in the ecosystem. But what does it mean today, right? And I think its most simplistic terms, there's a set of roles and responsibilities between these relationships that have to be executed. And those roles and responsibilities can be fulfilled by a variety of different partners. And so there's different models out there of how those things are done. For example, somebody's going to have to generate statements. Somebody's going to have to calculate that APY. Somebody's going to have to do dispute. Somebody's going to have to be processing and ledgering the transactions, right? There's different buckets of roles and responsibilities that we need to think about. And it's really coming down to who is going to perform those roles and responsibilities. But at the end of the day, when it all comes to bear, it's the bank's responsibility, right? So even if they're not the one that is doing that, a particular task, they need to oversee it. They need to make sure that it's being done sufficiently. So they're the lead in the dance. The bank is always the one that's in charge. And from there, it's just divvying up who's going to be doing the roles and responsibilities. And oftentimes it works best when you let the people who have their competency in a certain place do that. So let the tech companies build the tech and let the bankers be the bankers, right? And we usually find some really good synergies when those types of things happen in these relationships.
Yeah, I absolutely agree. And I guess just it's most foundational, just so we're all working on the same page, it's really a model where through the partnership, the fintech is bringing its customers to the bank in order to provide deposit or lending products to those customers, which in turn become the bank's direct customers as well, which then triggers all of the bank's regulatory responsibilities and all of the different types of oversight models that Amanda described. And really at its heart, in this model, the fintechs are really acting as a customer acquisition and distribution channel for the banks.
Which I'm not a corporate governance professional, right? I'm a recruitment professional, but I can imagine exponentially raises the risk profile of the bank. I'm assuming if the customer of a fintech is in turn the customer of a bank, even if it's indirectly.
Yeah, I think of it from the bank side that my fintech partners, everything that their employees do, I'm responsible if it hits the customer or a regulatory requirement. So from that perspective, it certainly expands the inherent risk. I wanted to ask, maybe starting with Mike, what is the recent history of bank fintech partnerships? Like, kind of bring us up to speed to the current day.
Yeah, I think that ties in really nicely, Dane, to the comment that you just made. And I think the recent history of bank fintech partnerships is probably regulatory friction, right? As Amanda said, this model has been around for a long time, but over the past 2 to 3 years, a lot of banks started getting into this as a growth strategy. A lot more fintechs saw the opportunity to partner and offer additional products to their customers, and control a bigger share of the wallet. And banks have realized some tremendous growth in customer and transaction volumes in a very short amount of time, and that has triggered the regulatory awareness and concern over this, because risk is no longer really effectively measured by balance sheet and asset size, but more by the reach that a bank has now through its partnership with the fintechs. We've had a client, tell this story all the time. The regulator told them, "You're a $4 billion bank, but you're in the number of households that we would expect to see a $150 billion bank in." So that kind of in and of itself changed the regulatory expectations and moved the goalposts for what they're expected to have from an overall risk management capability perspective.
I think that's a really interesting distinction, because it's not just the size, it's the complexity of the program.
Exactly.
Anything
So I
to
think
add?
that's been a lot of the development recently.
Anything to add, Amanda?
Yeah, and I think that we can't ignore that some of this was for good reason, right? Some of the regulators' worst fears came to bear, right? I think for very different reasons, right? At least in my opinion, the bank failures and then the failure and collapse of Synapse did trigger a tidal wave throughout the ecosystem of very negative things that ended up happening, that I think gave rise to a lot of very legitimate concerns by the regulators. So I think kind of that level of complexity plus some like actual bad things happening in the ecosystem, definitely the intensity of all of the regulation definitely came to light over the last couple of years.
Yeah, and I'm curious to understand. I as a consumer have a very tunnel vision sort of view. I use the fintech and I get the products and services from the fintech. I don't necessarily see what's going on the other side, but Amanda, maybe you could you have sort of a really, I think, can provide a really interesting perspective on this particular question. How are bank fintech partnerships beneficial for banks? And then alternatively, how are they beneficial for fintechs? And who and overall what is ultimately benefiting overall?
Yeah, no, it's a great question. I actually staked my entire career on this when I started in this business because I fundamentally believe in it. So for banks, it comes down to just the basic principles, right? Banks want to lend money because that's where the majority of their money is made, right? But to lend money, you need deposits. And then you need to find a way to diversify your income stream and have fee income, right? And we're hearing fee income is becoming even more increasingly important today and in today's banking environment. So you take a small bank who probably can't afford great technology that the consumers want. Gretchen, like you said, you want that really great experience. And a community bank, a bank that is less than $10 billion, that typically is the bank serving this demographic in the fintech bank partnership space. And they're not going to be able to afford really great tech, right? To have the slick app, the banking experience to do that. So one of the ways that community banks can gather and have the opportunity to have more deposits, more lending opportunities, more fee income opportunities, and quite frankly, the ability to serve a broader segment of their population is through these partnerships. They can actually meet the customers where they're at. There could be a really great local bank that serves its restaurant community incredibly well. Why would we not let them offer that opportunity at a greater scale when they already have a niche in that marketplace, or just expand their other expertise to be able to do that? There's a lot of really great benefits, and I think you can see a lot of, if you go look at call reports, you can see a lot of banks who've been very successful at this and have been able to grow their deposit base, have very healthy, I'm sure their investors are happy with their ROA and their ROE and all of the banker terms. I'm using acronyms, which I probably shouldn't be doing. But there can be these very healthy bank balance sheets that can come from this. But the big caveat on that is it takes work, it takes effort, it takes investment to be able to get there. Those numbers don't come up overnight. There's a lot of blood, sweat, and tears that goes into that. But for banks, that's why they can grow, they can stay alive, they can meet customers where they're at, and they can offer competitive products. I think for the fintechs, I'm going to go back to that restaurant example. If you're running a vertical SaaS company that serves restaurants, right, and you can embed a checking account into your platform where that restaurant owner is going to log in every single day and is going to check their payroll and their invoices that are due, why would you not connect a bank account and embed a bank account into there? But the real winner, because it's going to make that product stickier, right? And it's going to make it more valuable, and you can generate revenue off of that when you do that. But the ultimate winner in all of this is the end user, because I look at that restaurant, like the restaurant owner, they just get an amazing experience because now when they log in to manage their restaurant, they're running a restaurant. They don't want to worry about how they're going to pay their bills or their payroll. They have to do it because they're a business owner, but that's not their passion. So when their software company that is bringing this all together can put that in one spot for them and actually can use the data that it's seen from other elements to curate financial products that meet them where they're at, that's an amazing experience. So that restaurant owner can optimize and can do better, right? And so like when we step back and we think about why are we all in this business? Why are we doing this? It's to improve that consumer's experience with that financial product. Maybe give them access to something they never had the ability to have access before, right? And so you can take a bank who's really good at some things and a technology company that's really good at some things. When you put that together, there can be a magic that happens if done appropriately for the end users that ultimately benefit. So I think the short answer would have been actually the consumers are the beneficiaries of this.
I want to build on that, and then Mike, I want your take, but I think of it as these partnerships drive our entire industry forward. The fact that you don't have to drive to a physical bank to do your financial business is because of fintech challenging the way that we think of financial services. So absolutely what Amanda said, and it changes consumers' expectations of everything, like just with all the ways we pay, all the ways that we do business. All right, Mike, I'll pass it over to you.
Yeah, I completely agree with that. I mean, on the bank side, it just allows them an opportunity to offer products to a customer base that they previously wouldn't have had access to with user-friendly digital experience. And as Amanda said, it saves them the cost of expensive technology implementations on their end. On the fintech side, depending on the fintech's business model, this may be the engine that makes their business model go. If you've got a neobank like Chime or a marketplace lender, their entire business model is based off of having that sponsor bank on the back end of this to basically enable the deposit and lending activity. They're the front end, they're the customer experience, they own the customer journey, but these partnerships are vital in order to make that work. And then I agree, ultimately the customer is the winner in this, because they get to choose how they want to be banked, and they get to choose the experience and the customer journey that best suits them.
One example I have is, I think of, let's say I wanted a personal loan. Well, 15 or 20 years ago, I would go into a bank branch, make an appointment, go to someone's desk, sit down, bring physical copies of my documents. A physical person would underwrite that decision. And even if it was a small dollar amount, and then they would probably print out physical. Anyways, I'm going on and on, but now you could go onto a platform like SoFi and just, refresh your data and go boop. And then, you could, I don't know, possibly get funded within a couple days. Not an endorsement, but it's just an example of how different things are from the consumer perspective.
That helps understand.
Yeah. And it's like stuff that, maybe people take for granted, but if you've kind of seen over time, like that is a staggering difference. So Mike, let's go back to you. What do you think were the top learnings that we've seen through enforcement actions in bank-fintech partnerships over the last few years?
Yeah, I think that the biggest realization really has been that the regulators view the fintech partnerships as basically an extension of the bank, right? So they expect that the bank has the same degree of understanding, monitoring, and oversight of their fintech partners as they would an internal line of business. And that was kind of a shift in how banks had to really start looking at their partners in that regard. The consent orders focus on, the usual topics of BSA, AML, consumer compliance, and then just kind of partner and product oversight more broadly. But now if they are managing them like lines of business, they really have to focus on what are the key roles and responsibilities that the bank is going to execute versus the fintech, with the understanding that the majority, particularly of the risk management activities, are expected to be performed at the bank because the bank owns the risk versus the fintech. And in some instances where the banks have successfully pushed meaningful amounts of those responsibilities down to the fintech with significant oversight, I think it's important for the bank to push their policies and procedures down to the fintech as well for them to execute against, because if they don't, it's really difficult for them to demonstrate to the regulators that they can rely on what the fintech did if what they did it isn't aligned with the bank's policies.
Exactly. Amanda, do you have anything to add here?
Yeah, I mean, it all comes down to investment, right? In just making sure that you know what it's going to take to be in this space, the staffing, the talent, right? Like there's more people today that understand this space and understand how a compliance oversight program needs to work in this space, but making sure that you can bring the right talent. And sometimes you don't have to hire them, right? You have people like Mike, right, that understand how to build these programs, but making sure that you're willing to invest and set it up the right way, right from the beginning, because scale will happen fast in this business. And so you need to be prepared for that. And Mike, I absolutely agree where, everything you said, where the bank is in charge, right? Having bespoke compliance programs at the partners, that model is tougher, and it's going to be tougher for the compliance officer at the bank, because then they have to oversee each individual pocket of those different roles and responsibilities. It can be done. Like there's nothing, like all of those things can be acceptable business models. But it just requires a little bit more investment than on the bank side to make sure they understand that, and they have to overcome that challenge that you pointed out.
Yeah, completely agree.
So kind of piggybacking off of that last question and sort of, setting it up right, or, that saying, buy it nice or buy it twice, set it up right or set it up twice. As of where we're at in the year, still sort of early, kind of going into mid 2025. What do you both think are the top challenges for banks involved in bank fintech partnerships? And then what do you think are the top challenges that fintechs specifically face?
Well, banks are, I think banks are trying to figure out what's going on with the kind of dizzying amount of change that's happening right now in the macroeconomic environment, but even in the regulatory space, right? There's a constant news cycle of change right now, and so I think it's really hard for the banks to understand what is going to be the status quo. And banks tend to like stability. Like I'm still going to consider myself a banker. Like we like stability. We don't like massive amounts of change. So right now, I think that's one of the bigger challenges that the banks have, is just trying to figure out, how do I make decisions, right? I might have to make a decision without full information, or maybe I just slow my decision-making process down. I think those are two things that we're going to see in 2025 on the bank side. I think the biggest challenge on the fintech side is there's still not enough banks in this space. We need more banks in this space that are willing to invest and, again, do it the right way. But there's more banks out there that I think would serve this ecosystem really, really well. But we, as a community, need to support them and help work together to help get more banks into the space. And I think also changing requirements for fintechs. The one thing I would say is sometimes fintechs or tech companies get a bad rap that they don't like compliance or that they don't want to do those things. Actually, like, fintechs love it. Like they really embrace, they want to be at a bank that is going to be compliant. They want to understand that there's guardrails and that there's internal controls. So I think for them, it's just, okay, now there's been a lot of change. My bank might have a bunch of new requirements because they just went through an exam. Just keeping up with that pace of change until we get to a new steady state, I think is hard for some fintechs to keep up with. It's not that they don't want to do it. They absolutely do want to do it, but they just got to build that into their product roadmaps to make sure that they can find the time to do it.
Yeah, I agree with that. I would say on the bank side, the biggest challenge that we see across the industry is data. I think a lot of banks jumped into banking as a service or embedded banking without clearly setting very specific data standards for their fintech partners right at the outset, in terms of what information about the customers and the transactions do they need, how do they need to receive it in order to ingest it into their infrastructure, and what's the frequency. And now they're faced with having to go back and try to remediate all of that on the back end, and that causes friction between the bank and the fintech. A lot of the other challenges that the banks have across BSA, AML, financial reconciliations, and other things are all significantly mitigated if they've got access to the right level of data that they can run through their internal systems. So I think data has really proven to be the most foundational challenge on the bank side. On the fintech side, unregulated entity operating in a highly regulated environment. So they just need to understand clear roles and responsibilities. And I agree with Amanda. It's not that they don't want to do it or that they want to be difficult. They need help, and they need to clearly understand what role they need to play in managing that.
I love that, like that the fintechs actually care and want to build things correctly. And I think that's the actual most fun part of what a bank and fintech partnership can be, when I share with my fintechs clear guidance on, like, this is what the regulation says, this is what it means, this is what regulators are going to be looking for. You want to get here, let's like create this together, as opposed to yes or no. And people who are founding tech companies are investing their whole lives into this. They're often very smart people, and the stuff they can come up with is going to change the financial system for the better. So I think it's super exciting. What else? We have had a change in administration, and I know there's a lot of headlines that are coming out. The new FDIC lead had some comments that were perhaps more favorable to innovation, fintechs, bank-fintech partnerships. I see things such as reputation risk is not going to be a consideration as it was in the past. There's rumors about, CFPB. Mike, what do you think are some of the impacts of the administration that we might see in bank fintech partnerships?
And sorry, before
Go ahead.
you answer, Mike, I'm curious to understand, just piggybacking off of Dana's question, will these impacts vary based on the size or AUM of the bank as well? So, Mike, not sure if you're ready, but we're going to kick it off first.
So that's a good follow-on question. I think that we've already started to see the easing of regulatory pressure for the larger banks. That hasn't necessarily trickled down yet to the community banks, particularly those that are engaged in bank fintech partnerships. So there is a growing optimism, though, Dana. I mean, as you suggested, with the new FDIC appointee. So, there's optimism that we will have a more collaborative regulatory environment, and one where they will actually set some clear standards and expectations, either through rulemaking or published guidance, and move away from more of the regulation through consent order. But that we're going to have to see as things develop how that actually plays out. And maybe a little early to tell. From an asset size perspective, Gretchen, I would say that some of the biggest banks, they will probably see the relaxation of the pressure more than the smaller ones, because they've got the infrastructure built out to manage the risk implications better.
Cool. Amanda, what are your thoughts? And also, even if there isn't easing, do you have any guidance for practitioners to maybe not completely throw away common sense?
I mean, I like wrote down notes, and it was like, just don't try to follow the regulatory pendulum. It will never work. Yeah, like if this isn't, like, I've been doing this for a long time. You see it go really conservative, you see it loosen. You don't want to try to follow that, because it's just going to be a boomerang that ends up getting you. Like if you're a bank and you're a compliance officer, risk manager, you know what good principles are. You know to build a first, second, and third line of defense. You know to build a risk appetite. You know the things that you're just supposed to do based on the regulatory guidance that's been around for years. Just stick to the rules. Stick to, like, use common sense when you're building your program and you're thinking about things. Just because they say they're not going to look at reputational risk assessment as something, like, I think you should still probably think about, like, is that good business to think about the reputation of your partners? Yeah, probably good business to do that. So I think, like, good common sense and not going too far one way or the other is kind of the best way. Is how I'm approaching things for 2025, is just like, do the right thing, keep your head down, just keep doing what's right.
Yeah. With regards to reputation risk, I also equate that with your brand. And a lot of people, a lot of executives care very much about your brand and the image of your brand and the quality and reputation of your brand. So I can appreciate that they're not wanting specific niches of industry to be excluded. And I think brand is is something that people care about. All right. Amanda, what does the future of bank-fintech partnerships look like?
So I definitely think the future is embedded. I think it's going to be embedded everything, whether it's loans, deposits, payroll, accounting. I think people will get very accustomed to going to their trusted app on their phone. We all have these things constantly attached to us. And so I think everything in financial services, everything in our life is going to go more towards that embedded space. I think we're going to move away from these bank fintech partnerships being considered kind of niche during exams. I think they will become more mainstream in the future. More of the basic group of examiners will understand them and will be used to it. And what I'm really, really excited about, and again, it's probably all kinds of future topics, is AI. As a compliance professional, I am so excited about, with caution, of course, with AI. Mike, I think you said something earlier about how scaling compliance and how can it be scaled efficiently. The tools that are out there today that I'm seeing are just amazing. Things that you would have a whole team just looking and doing monitoring and testing on, the efficiencies that you can find and deploy that allow you to go deeper and wider and cover more risk vectors to look for things with these tools, I think is going to be really, really amazing. So I think we're just going to get better. I think the tech is just going to make it better when it's used properly.
Yeah, Mike, what are your thoughts on the outlook and future of bank fintech partnerships?
Yeah, I think as banks continue to adapt to heightened risk management expectations, and that is accepted and just part of the norm, more banks and more fintechs are going to continue to jump into this business model and to offer new and innovative products through the fintechs technology platforms as just part of a growing financial ecosystem. I think the outlook is good.
Awesome. I'm very hopeful, guys, after this conversation. And I, for one, can say that I learned so much throughout this. And so this leads us to our final question. We do ask this question to all of the guests who join in FinTech We Build Trust. And the question is, what does building trust in FinTech mean to you? So take it in whatever direction you'd like, and we'll kick it off with Amanda.
Well, I did, because I knew this would be a question, thought about it a little bit. So I boiled it down to four things. Facts. I'm a risk manager. I like to have as much information as possible when I'm making decisions, but they need to be facts, not opinions. I think sometimes this industry has gotten very fraught with opinions, and I think we have to start filtering through the noise a little bit and get to facts versus opinions to really build trust, to make good decisions. Doing the right thing. It's something that's my guidepost. Every time I go to make a decision, I'm thinking, am I doing the right thing today? Doesn't mean perfection. Plenty of mistakes will happen. But I think when everybody knows that your intention is to do the right thing, it can cultivate trust faster. Assume positive intent. I think that's something that can be a lost art. It can be hard, but when something happens, it's much easier to filter through the noise and figure out what the learnings are when you're assuming positive intent, and people tend to just prefer to work in that type of environment where that's the basis of where you're coming from, and just trust each other a little bit easier. And then showing up just day in, day out, have a product that's consistent, have a product that's reliable. If you're in this space and you're touching people's money, you have to be trusted. And so whatever you're building, you got to show up, you got to be consistent, you got to be reliable, because if you're not, people won't trust you.
Whoops, we may have lost Dana. Not sure what happened there. If she comes back, I will. There she is.
Sorry, I clicked the button.
Amanda, just wanted to say, assuming positive content is not a common answer I hear from compliance officers oftentimes, like who are, always trying to mitigate risks and think ahead, and especially financial crime professionals. So that was a really interesting take, and I appreciated your perspective.
I want to add on to that because that's one of my kind of personal things. Assuming positive intent, kind of how I interpret that is in written communication or in communication. It's not that I'm not going to verify or just accept what you're saying, but it's kind of like how you enter a conversation, how you enter possibly a difficult negotiation. Are you assuming that the other people have positive intent, or are you going to kind of come in with a guarded attitude? So I love that, and I feel like it makes business easier, especially when we're constantly navigating difficult situations. But as a compliance officer, I'm also trusting and verifying.
Yeah. And I do want to just give a caveat, like 2 of those things, doing the right thing and assume positive intent. Like my former employer, Sunrise, those were like 2 of their core values, and they just resonated, right? And so it's always fun when you work someplace that those values just carry with you into the next role, the next job that you have. So anyway, just want to give a disclaimer of credit.
Mike, what about you? What does building trust in fintech mean to you specifically?
Well, Amanda covered off on the risk and compliance angle of it, so I'll come at it, I guess, more from the business side of it or the product side of it. I think that customers trust the experience and the convenience that fintechs are able to provide to them, and there's been a change in customer expectations over the years. Fintechs have been disrupting the financial services industry for quite a while, and they're going to continue to do that. And as they continue to partner with banks and work through what is appropriate risk management, they're going to continue to operate and deliver new and innovative apps and tools to continue to enhance the digital experience and the customer's growing demand for convenience. And I think that's what they're looking for, and they trust it.
Before we close, I just want to say, I think, Mike, you have some really beautiful like bird noises in the background, and it's like so soothing. Like, is that actual nature that we're hearing?
It is.
Okay.
It
Wow.
is.
I love that. You should just can that and sell it because it's very calming.
I have one little bird who every morning starts pecking at the window like he wants to get in here.
That doesn't sound very calming, but yeah. Oh, I hear it. Cool.
Well, thank you. Sorry, Dana, go ahead.
I had nothing else productive to say. Yeah.
I was just going to say thank you, both Amanda and Mike, for joining us today. It's been a fabulous show. Thank you to our audience members, returning and new, for tuning in today. We will be posting the multiple different post-production versions of the show on our LinkedIn page, YouTube, Spotify, as well as the show posted on those platforms as well. So in case you missed it, definitely share with friends or give it a listen when you have the chance. But thank you again, both, to our guests for joining us. And Dana, anything else you wanted to add?
No, have a fabulous day, everyone. And I'm going to get back to the compliance work.
Thank you.
Yeah.
Thank you.
Thanks so much, Amanda and Michael. See ya.
Thanks. Bye.
1